Good morning, traders. It is Friday, August the 2nd. Going to start out here with a different topic, just looking at the U.S. unemployment rate. Now, more or less, rates just came out this morning. Previous was 3.7, forecasted was 3.7, and it came out at 3.7. So not really much change there. But if we take a look at the actual historical charts of unemployment, let's just zoom back to the last few market bottoms, more or less, or actually stock market tops. And if we take a look at the charts, what's interesting is when we had bear markets started when we saw unemployment down near low levels. And you can see the last time we had a really significant low level was in 2000. We're down and actually below those levels, and the market goes in waves, as we know, and we're getting to an extreme point here. So this is just another kind of tool to look at to get an idea of when everything is good, everyone's been making money, and everyone's got jobs. Usually that the music is going to be coming to an end and the cycle reverts, and we'll see unemployment spike and we'll see a downturn. So keep an eye. We're starting to get down to these low levels where we've seen bear markets start, economic downturns start. And it's just one of those things to keep an eye on. Now, this is kind of a slow lagging indicator, but we're at these levels here. When things are good, you got to be locking in profits, managing risk, tightening stops on long-term investments that have been maturing for a long time. Now, let's go back to the equities charts. It's the SP 500, and I'm going to be working on some reports and videos that explain the analysis in more detail. A lot like in my book, Technical Trading Mastery, all these things are somewhat covered in there and explaining cycles, explaining oversold, overbought territories in the markets and trends and position management, all that stuff. But I'm going to jump in with some more details showing charts and provide an educational section in the members area as we kind of unfold all of our new features and charting that we're going to be bringing in to the members area. Now, looking at the SP 500 here, this is a 30-minute chart on the left. This is just regular trading hours. It's when the majority of volume trades. It's what I follow for our trend analysis in overbought, oversold territories in the market. The chart on the right-hand side is the daily chart of the SP 500, and it's 24-hour chart. So you see the full day price range. I like to see the full day for the daily, and I like to manage and monitor the regular trading hours intraday when the big volume is trading. Now you can notice here we've gone to orange bars. That means we've gone from green, which is an uptrend, to buy the dips, to now we are in a neutral to trend reversal, potentially starting to break down. And some interesting information here is we've got cycles getting into oversold. Our momentum, our short-term cycles are oversold. Usually this would be a buy signal, but our trend analysis is now telling us that we are turning down momentum. Many things are flipping to the downside, and hopefully we'll get continued flush out. Yesterday the market closed right here, and today we're seeing it continue to move down. Hopefully we'll see it continue to collapse. We should hit our first target on our SDS play. As soon as we hit our first target, our stop will go to our entry price in the market where we got in, so that if price has a knee-jerk reaction and starts to rally, it'll be a hard stop, meaning you place the stop, and as price rallies up, as soon as it touches that, it gets us out. So we'd lock in a profit somewhere down here this morning, and if it rallies against us, we get the rest out at break even for a small profit. If we get follow through selling over the next few days, a big sell-off, then we'll be going down to hit our next targets or playing the trend to the downside until we start to see signs that it might be reversing. So even though we're oversold today, the trend is turning down, and we got to be aware that we could get expansion and continued moves. Typically, the way the market works is you'll have cycles in the market and like this, but when the cycle breaks, you get a double move down. So this move to the downside, when a cycle actually breaks or a trend breaks, you get that same move to the breakdown. So you get a double move. So there's potential here. We get a big thrust to the downside, which is what we're in position for, and hopefully we'll get to play that move. Now let's take a look over at the other markets here. Let's just touch on crude real quick. Crude had that pattern I talked about several times actually. I talked about last week and earlier this week, but more or less this move down and then this kind of bear flag that was channeling how the market kind of came up and kind of breached these highs to kind of shake the market out, and then it went into collapse mode. Very similar pattern we have here. and our stop did get triggered. It was starting to rally. We don't want to take too big of a loss on a trade. We end up getting out, and then the market, of course, rolled over yesterday, down huge. Today it's up about 2.2%. Again, it's an oversold bounce. It means it just moved too far too quick, and it's a bargain hunter stepping in. It is under resistance. It's under this flag. It's flirting with this blue resistance line. Could very easily chop around here for a few days and then continue another leg to the downside for this downward target of 51, 52. We may look to try to get back into that play. We'll keep our eyes peeled for a potential setup on the shorter term charts and see if we can get in and play this. But we did get shaken out. It happens. It's just the way the market moves. And sometimes you get squeezed out of positions just because the market moves more than you want. Looking over at, let's go over to the dollar. The dollar yesterday, big move up in the morning and then reversed down. Today it's trading lower again. Obviously lower rates, not good for the dollar, but seems the market makers and the players buck the trend and push the markets in all opposite directions you'd expect the previous session, and it's starting to finally catch on. So we could see the dollar start to fade down. Again, we talked about the dollar hitting 98, which it hit 98 yesterday. Here is the dollar. I've been talking about the 98 target for a long time. Here's the 98. It blew through that, went all the way up. I talked about how we're looking for it to get to the 99, 100 potential long term, and from there it could reverse down. And that's what we're starting to see now, kind of a blow off top and then a reversal down. If the dollar continues to move down, that will be the start of a very significant rally in metals and miners. We are in position with gold. We're in position with silver miners. We got the best of both worlds, I feel. And if the dollar does crumble, and the breakout has follow through with the precious metals, then we're going to be set for a pretty significant rally and gain over the next couple months. Now let's take a look over at, let's go to pull up bonds real quick. Obviously bonds popping and moving. Usually when you get out of stocks, you can rotate into bonds, but instead we're going inverse with the SP 500. I feel like it's a little more predictable than bonds. I don't trade bonds very often, but I like to follow it to get an idea of where fearful money is going. Right now people are afraid. They're piling into bonds. We saw panic selling yesterday in the market, and the VIX was spiking. So all these things are telling us everyone's fearful, which puts us into that oversold territory I just talked about on the SP 500. Usually when everyone's panicking, we usually see some type of bottom in the market. So we could see a pause or bounce in the SP 500 for a few days, and then once that kind of panic kind of dissipates, we could see a breakdown to some new lows and then see that second wave to the downside. So we'll just see how things go. But if you look at, let's just go over to gold here. Gold popping today, it's showing it's up about 1%. Chopping around, it's still struggling with this upper area. We get into these upper wicks and it sells off. We had a big pop over here, sell off. We're back up with very big volatility, so it's still struggling to break out here. But when it does break free and start to rally, we could see a very significant run. If we were to throw a Fibonacci extension on here, let's just get a target of where the next big thrust could be. If we go from this low up to this high, down to this low, carry it forward and crunch the chart down, we can get an idea where that target is. So the next potential big run in gold, we've got the rally, we got the pullback, which this is a really nice bullish formation, and then from there the first target will be up here, and then the next second target will be 1550 to the upside. So we could really see things start to pick up in gold, and more or less this whole move would be completed around the 1550 area, 1556 zone. If we take a look over at silver, silver is actually down this morning, continuing to kind of chop around. Now, silver is going to trade a little off. It's not quite the same fear play as gold, but overall it typically follows suit and plays catch up. So overall, silver is down a little bit today. Probably miners will be, let's just see where miners are trading at pre-market. Miners are flat to down a little bit as well. Obviously, big reversal, GDX, GDXJ. We did get into SIL. Let me pull it up. You can see the big reversal bars, big gap down, and then a strong rally, very strong sign. Hopefully we see follow through and we just start to see this plow and take off to the upside for silver miners. Looking over at natural gas, As the stock market sold off, natural gas popped. I talked about it with Howie Street radio show I posted out there yesterday, how it bucks the trend. When we have panic selling in the stock market, we tend to see natural gas pop and rally, and it's fizzled out now. It's dropping down, and we're still gunning for this long-term $2, 205 area for natural gas long term here. If it gets down to this area, it could be a great opportunity for it to carve out a bottom or have some type of impulse rally. And that $2 mark would be, I think, a very significant level that once we start to see a basing or a reversal pattern to get in for natural gas, because I think it's got a lot of upside potential going back. Looking way back on the charts, it's a very significant cheap price that is a whole number, and it's got a lot of upside from there. To just touch on the kind of the fear in the market again, we're going to look at the XLU Utilities Index. Now, if you recall last year, October to December, we more or less saw the stock market sell off in a big way. And while the stock market sold off, we saw utilities run and move higher. And we didn't see utilities have that big flush out until the very end when real panic, hardcore panic and distribution selling hit the market late in December. But that whole time when the stock market was falling, we saw utilities move up. And of course, utilities are seen as a safe haven play. I kind of group them into somewhat like gold, bonds, because investors move in. Utilities, you're always going to need heat, hydro, water, all those things, electricity. And they pay dividends, so you can always get into these. When people are afraid of what companies are going to do, well, the utilities will just keep on plugging away. And I think we could be getting into that again. Yeah, nice bounce up here. Obviously, it's had a run, a consolidation, or run. It's been consolidating. We could very easily see utilities hold up and move higher over the next little bit, while the stock market potentially has some panic selling in it and fear going forward. Anyways, that's really it for this morning, and I'll talk to you in a little bit. Bye bye.